Gold had a great year in 2023. It was up approximately 13% from where it began the year, propelled higher most recently on expectations of several Federal Reserve interest rate cuts during 2024. That wasn't the only thing propelling gold higher, however, last year. Conflicts in Ukraine, Israel, and recent tensions between Iran and several other countries in the Red Sea region have got energy prices kind of beginning to tick back up. Now, I'd like to read an article that was published on January 4th by Inves. This article looks back at 2023 and also forward into 2024 with a gold spot price prediction and the catalysts that support the prediction. If you're interested in listening to opinion pieces about Federal Reserve policy, US dollar strength, and the impacts on gold and silver prices by global conflicts, then stay tuned to this video coming right up because we're going to break it all down. Hey, welcome back, everybody. This from the article. Gold prices are widely expected to continue their upward trend during 2024 after having returned over 13% last year despite a hawkish Federal Reserve, outperforming bonds and most commodities and performing similar to the tech-heavy NASDAQ. As a result of a newly dovish Fed and expectations of interest rate cuts, analysts at JP Morgan estimate a target price of $2,300 during 2024 for gold. The added complexity for gold comes from it being both a consumer good as well as an investment asset, a non-yielding one that is also considered to be one of the best hedges against inflation and unforeseen economic events. The prime concern looking ahead for markets is whether or not the Federal Reserve can truly execute its soft landing approach. There is considerable confusion over the economy's likely trajectory, with Bloomberg Economics placing the probability of a hard landing as high as 55% next year, while the Cleveland Fed estimates this to be as low as 28%. All right, let me give you my take on all of that before I proceed further. Now, last year, 2023, interest rates did rise, making traditional borrowing more expensive for consumers. On the flip side, those investing in savings accounts, bonds, certificates of deposit saw improving yields throughout the year and higher returns as banks began to pay out those yields to depositors with the new higher rates. For gold to outperform its safe haven rivals last year in a year when those rivals were actually seeing better returns tells me that gold is moving higher on more than just Federal Reserve policy. We kind of touched that out on the intro due to some of the conflicts. It's an election year, plus the national debt. Let's quickly recap 2023. Amid substantial market volatility and the rapid pace of Fed hikes in 2023, the yellow metal performed positively and finished the year at approximately $2,070. Earlier on in the year, gold scaled the $2,000 mark as a response to the fast brewing crisis in U.S. regional banks before the Fed, Treasury, and FDIC officials stepped in to ease market concerns, leading to a sustained drop in gold to the $1,800 levels by October of 2023. This trend, however, reversed in October during the outbreak of war in Israel. Prices continued to rise until reaching an unprecedented surge in early December 23, with gold hitting a record high in US dollars of $2,153.40. This on the back of market expectations that the Federal Reserve was abandoning its higher for longer strategy of interest rates. So it was an up and down year for gold, up during the banking crisis, down once the Fed pumped a bunch of new fiat into the system, and then we had the conflict that kicked off in Israel. And it's been kicking up since then now with these interest rate reductions expected next year. The overall trend, especially when zooming out to the last 20 years, is apparent. Back to the article now. We had a banking crisis. The cracks were forming. There was more debt created to solve that, and poof, solved. Yeah, right. That's my opinion. The debt has been going on for some time now, and it doesn't really matter which political party you look at, Republican or Democrat. The spending is moving up. On civil issues, social issues, whatever you want to say, the two parties differ. But when it comes to spending, they both spend more than we take in. Now, my belief is that the U.S. has passed a point of no return for the dollar. It is as if we've crossed the event horizon, so to speak. And without our military dominance providing cover for our now $34 trillion in debt, things here in the United States, that is, I think they could get pretty bad. Okay, things could definitely go in the wrong direction as far as quality of life here in the United States. Now, we are far too politically divided, in my opinion, to come to some type of solution. And our children are growing up with phones and tablets in their faces, all expecting incomes and lifestyles of doctors, rappers, NBA stars, or Lambo-driving social media influencers. But instead, what we're seeing is more drug use, lower performance, and obviously depression seems to always be on the rise. All right, now getting back to the article this time for real. Looking ahead to 2024, upward momentum for gold prices in 2024 is widely expected to remain intact, with many of the same forces carrying over from the previous year. An example, a dovish Federal Reserve, continued geopolitical upheaval, and firm central bank purchases of gold itself. Usually, a looser Fed policy implies that a non-interest yielding asset such as gold becomes more competitive with those interest-bearing mainstream financial instruments when rates are coming down. And now we saw last year that gold outperformed even when rates were going up. So the expectation is that gold will continue to outperform. In addition to the expectation that the Fed had reached peak interest rates and then elected to deviate from that higher for longer policy, this fueled suspicions that the Fed had over-tightened to combat inflation, hence the potential rate cuts that are coming up and why the market got a little crazy there in December. Now, the market still does forecast 4 or up to 5 rate cuts next year, though that may be beginning to change with some newly emerging economic data here in the beginning of January, but we'll just have to follow and see what happens. Once more, lower rates result in a weaker U.S. dollar, which usually bodes well for globally traded commodities, which is pretty much everything. Gold and silver are on that list that are often priced in U.S. dollars. Okay, a weaker dollar, things that are priced in dollars, the amount of dollars it takes for the same value goes up, right? So it's good for gold. Now, I'll summarize the remainder of the article, which does delve a little deeper into the events taking place in the Red Sea currently. In summary, 2024 is also an election year in the United States. There's an expectation of volatility due to that policy uncertainty, especially if it looks like it's going to be really close. Usually bullish for gold, by the way, when things are uncertain. That is, that word uncertainty is always used in my stacking videos because it's a big part of what drives the price of gold and silver higher. Okay, Taiwan also has an election during the month of January. Potential implications there, especially with the little potential war, I should say, or invasion by China, something that everyone talks about for many years now that has yet to happen. It may never happen. I'm not quite sure, but that's always a sticking point. And also the European Parliament elections are coming up this summer. So slowing economic growth forecasts, that's another thing to talk about, could also benefit gold spot price this year, as the IMF recently reduced its projection for year-over-year growth in 2024 down from 3.5% globally to 3% globally. So that's 0.5% off, which also points favorably to gold's value going up this year. Now, I'd like to ask what your thoughts are on gold in 2024. There are people out there that think we're going to see it crash back down. When you really zoom out and look at using the telescope instead of the microscope, I think it's pretty apparent that unless something significant happens with Federal Reserve policy and the strength of the U.S. dollar, I just don't see that really happening. I really don't. It seems that we're going to continue on this trend. Maybe they can slow the hemorrhaging somewhat, but I just don't see how they can reverse course at this point with $34 trillion in debt. And the economy where it's at, plus all the political divide, it's about a 50-50 country, it feels like these days. So it's real hard to get things done. Now, I see more conflicts ahead if the United States continues to project weakness. Now, if we change things around and get back on course and start to combat the debt and take care of our border and some other issues that we've got in this country, then that could all change. We could see a strengthening dollar, and that could be a bear indicator for gold, remembering that gold is, also a defensive asset, or in an insurance policy, tough word for me, I guess, for a lot of folks. So let me know what you think. I'd like to hear in the comments section. Thanks for checking out my video today. $2,300 gold in 2024. I don't think that's too far out there. I really don't think that's a stretch, especially if we do get those rate cuts that the market thinks we're going to get. All right, folks, that's going to be it. If you're new here and would like to see more content like this, then please consider subscribing to the channel. Check out any of my 450 or so videos over the last 5 years on the channel. Thanks again all, and I'll see you again soon.
Thank you for watching our video. I hope you subscribe to our YouTube channel.